Good morning, folks. Hope everyone out there is having a good week so far. And it is, once again, a momentous occasion. It is Taco Tuesday, one of the most important days of the week, of course. So hopefully you're prepared to celebrate accordingly this evening. So it's me, Markets Mayhem. I'm back for my regular Tuesday segment, Back to the Futures. I think we're going to have some fun today. But before we dive in, let's just quickly get through the general disclosure. All Bookmap Ltd materials, information, presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. With that out of the way, just a little bit about me. My trading journey began in 2005. I funded my own account and began trading stocks. And this was a pretty interesting journey. I basically self-taught. I did have some mentors. That was pretty cool. But most of what I learned was through trial and error, my own experience, and so on and so forth. And so I went through the great financial crisis. It was pretty harrowing. It was an eye-opener. I was lucky enough to liquidate my assets ahead of it because I just, from a technical basis, saw the potential of a double top. And I said, look, if it gets above there, maybe I'll lose a little bit of the gains I could have had. But if it doesn't, I'm getting out of the way. I had no idea what was going to come next because I wasn't nearly as familiar with macro as I am now. But that whole experience had me really wanting to learn more because I saw the financial plumbing begin to implode in front of my very eyes. And so that was pretty formative experience. Like, imagine waking up and seeing stocks like ExxonMobil or Microsoft being essentially no bid. That was kind of how bad it got at times. And there were also the opposite. There were days where the Fed came in and they would do a stick save, like an emergency 50 bips cut. And then all of a sudden the market's up, like, the Dow would be up hundreds of points. And this was at a time where it was trading, 6, 7, 8,000. So it was a pretty big deal when it was up that much. So it was an interesting experience, but that's what kind of got me to appreciate more that there's more to the market than just the technicals. The technicals are important, and that's where I started my trading. That's where I cut my teeth. But at the same time, I felt like there was more to learn. And so I did. I spent a lot of time learning about the macro element, the big picture. I learned more about fundamentals. I learned more about intermarket dynamics, how bonds affect stocks, how oil volatility can affect currency volatility, and so on and so forth. Really trying to put the pieces together of the puzzle that is the market. And I will say, even though I've been in this trading and investing game for almost 20 years, I find there's always more to learn. And that's kind of what makes it awesome, quite frankly. It's what keeps me interested in finance as a whole. There's always more to learn. The moment that anyone says or thinks they're done learning, they know all they need to know, it's time to either take a step back and remember this is sort of like trying to go to a beach and grab a handful of sand. That's about as much knowledge as you can reasonably accumulate. And yet that whole beach represents knowledge, right? So there's always more to learn. And it's important to keep an open mind. My own approach is systematic, driven by momentum, price action, options flow, sentiment, positioning, volume profile, and the big picture. Sounds like a mouthful, but I've actually created models that help to distill this so I can have convergent signals generated from one or more of these firing off and giving me a sense that, maybe there's an opportunity here. My whole theme is convergence, though. I really do like to see multiple different indications giving me a sense as to where price may go. For example, let's say we see a lot of calls targeting a certain area in the S&P 500. And at the same time, we also see a lot of open interest, open orders above there around that level. And we have momentum favoring upside. Well, now I know that the path of least resistance is likely higher. And here's a reasonable price target for 2/3 or the core of my position, just as an example. So I began working with Bookmap in early 2022 because I saw great value in the way their platform displays market data, like icebergs and stops via Rhythmic. This is really cool because being able to see this rather than just sort of guessing what might be a stop run or what might be an iceberg, you can actually have some sense of clarity and certainty. I co-founded TraderAid in 2022 and Macrovisor in 2023 to share my experience, ideas on market opportunities, and education. I also love building communities, and we have an amazing community at TraderAid. And I build a number of unique tools and models, and I provide one-on-one coaching. So let's talk about what exclusive deal we have for Bookmap. You can get up to 40% off of Bookmap plans at traderaid.com/bookmap. That's traderaid.com/bookmap. It'll redirect you to their website. Scroll down to the specials. Got some really decent offers there, exclusive to you all. And finally, check out the Bookmap Discord. Join us. There's plenty of educational events, real-time interactions, lots of different people there. In fact, the community there is awesome, and so is the Bookmap team, so worth checking out. So with all that being said, I'm just going to go ahead and close out the presentation, bring up Bookmap on screen, and we're going to talk a little bit more about how Bookmap works, because I do get a lot of questions, what am I seeing on the screen? What does this mean to me? I get it. There's certainly a lot to parse here with the data as it's presented. So let's go through some of that. And as we do that, we'll get ready for the market open, which is in about 23 minutes here. So the first thing that folks ask me about are, what are these bubbles? What do they mean? And how are they different than candlesticks? Well, the bubbles are delta bubbles. So they're showing you the differential between buy orders and sell orders, right? Green bubbles indicate buyers outnumbered sellers. Red bubbles indicate sellers outnumbered buyers. And the larger the bubble, the larger the delta or the difference between the two parties. So that can be pretty helpful to have right at your fingertips, especially during the trading day, to get a sense as to who is showing more aggression, who is getting more determined to take control of the price action. So that's the sort of summary level explanation of the bubbles. I find them to be quite helpful for the time frame that Bookmap is showing me. As you'll note on screen, I'm only looking at about 30, 40 minutes of data, sometimes even just 20 minutes of data. Of course, I'll zoom out. Like, for example, if we want to see what happened during the European session, I've got backfill, so we can see overnight pretty much just chop, pretty much just consolidation. And then I can quickly come up here, click on the time selection, and go to 20 minutes if I want to, right? So then above and below the bubbles, and even just around them, you've got these bands. This is a market-making algorithm from the Chicago Mercantile Exchange that is offering liquidity above and bidding below, kind of in a tight range. Now, as the market opens, we'll likely see more bid and offers stack up. You can see this one around 59.29 here with about 344 on offer just above us. So that's a decent amount of liquidity. If we scroll out a little bit, not a whole lot else to see here. So we'll see what that looks like during the trading day, but that's the cumulative order book or the current order book, right? What you're seeing in the heat map is also represented by that COB column. So the heat map is visualizing it in the present and also on that historic basis over the time frame that we've shown on screen. So right now that's 20 minutes of historic data, and then you've got the present. And that's pretty helpful to be able to see that information visualized. Then you have the session range volume profile. That shows you where people have already transacted. So the current order book shows you where there's interest in transacting. The session volume profile shows you where there's already been transacting. So that can also be quite helpful just to get a sense as to where market liquidity has been and where it's interested in potentially buying or selling. Right of that column, we've got the options visualizer. This is a tool that I built to add a layer of nuance to my analysis in Bookmap. And what this does is it shows where SPX options are transacting, and it converts them into ES or S&P 500 E-mini futures levels. So we can see yesterday's most active call, second most active call. That's the hot call and the warm call. And then the most active put, and then the second most active put. That's the hot put and the warm put. That is helpful to be able to visualize so you can get a sense as to how options are influencing price action in the underlying. And they have a pretty big influence. S&P futures, NASDAQ, Russell, and Dow futures all together trade about 450 to 500 billion in notional a day. The options market for just the S&P 500 trades 1.2 trillion notional a day. So it has become the tail that wags the dog. Seeing that options flow is pretty important. And I do have a tool for this called the Options Visualizer that's available on the TraderAid website as a plugin for Bookmap. So if you already have Bookmap and you want this tool, visit our website at TraderAid. Go to traderaid.com/SPX, like the S&P 500 index, and you can learn more about how this tool works. On the subchart, we have the cumulative volume delta, icebergs, and stops. That's what I visualize there to keep it nice and easy, so at a glance I can kind of see what's going on. Some folks have mixed opinions about the value of the cumulative volume delta. I find that it's good to see it if there's a contrast, right? So if CVD is going one way and icebergs are going the other way, you get a sense that market participants are, say, for example, buying, while larger trading desks are passively selling into that buying. And if that selling is large enough, it eventually can mark a turning point. So I do like to see if there's contrast between the two, similar with stops. Like if there's a really big stop run to the upside, lots of shorts getting stopped out, but then icebergs are selling into that, sometimes that can also offer a turning point or even exhaustion. And that's also an indicator I built that's exclusive to the TraderAid Discord, an exhaustion indicator to show sometimes when one party is running out of steam, when they get a little bit ahead of themselves. Now, we have the radials on the lower right. This is the liquidity differential, or LT-diff. We also have the iceberg and stop count over a 20-minute rolling basis and the cumulative volume delta. And then over here, I also have this ES aggression indicator. And what this shows me is really when one party is getting really aggressive on the bid or the ask, it'll actually cue up a sound and it'll basically tell me, hey, you should probably be looking at Bookmap. Now, if you want to build this indicator yourself, you certainly can. It's using the volume pressure imbalance indicator. I have it set with a 90 threshold. I set my sound volume to 20 so it doesn't drown out other things I may have on. And then I've got a half-life period of 10 seconds and a training period of 20 minutes with an hour of historical data loaded. So it takes a second for it to kind of process everything. But then once it does, it's able to really give me a sense as to when there's a little bit too much aggression on one side. And sometimes if there's some convergence there with, say, a stop run or an exhaustion signal or otherwise, that can be actionable. Now you'll see there's a sell side iceberg on screen, this 56 order, just a little bit of passive selling into that larger buy delta bubble. I do some tuning on my icebergs and stops. And the reason I do some tuning on my icebergs and stops is really to try to add value. So I want to make sure that when I'm looking at my screen, I'm really finding what is potentially more important order flow. So let's just take a look at that. I'll bring the settings up on screen here. So I'm using a 30-minute standard deviation interval and a 10 standard deviation multiplier for both the icebergs and the stops. And I am getting rid of the cancellation icons, event types, and event volume. And I'm using color-coded icebergs and stops, because for me, that really helps to know just at a glance, is that a buy or is that a sell? I just want to be able to look at the chart, get information, and have a sense as to what's going on. Now, I also have a subtle difference in how I do the stops versus the default. It's the same settings as the icebergs. It's that 30-minute standard deviation interval with a 10 multiplier, but I am only showing stop runs. Okay, and for me, that actually helps because, you know, it's more meaningful if there's multiple prices being experienced during a large amount of stops, right? Because that shows you there's basically higher potential that that stop run is going to matter. So not only is it a 10 standard deviation on a 30-minute time interval, but I'm only showing those stop runs or stop chains executed on multiple price levels, right? So that's how I take advantage of the stops and icebergs. I know you can view them all, and that's fine, and some folks may benefit from doing that. The way I trade, I really want to be much more minimalistic. I like to optimize my chart to be clean, simplistic, and if I'm not watching it all the time, and I'll tell you right now I'm not, I just glance right over at it and I get a sense as to what's going on. And then I also have those sound indicators, right? So the ES aggression indicator will make sounds when there's something I need to be aware of. I also have indications for larger icebergs and stop runs and other kinds of events happening. So I know I should turn around, I should look at that screen where my book map is and get a sense as to what's going on. Now let's take a look around some of these markets as we get the day started. We've just got about 14 minutes until the opening bell here. And if anyone has any questions as we're watching the markets here, please feel free to ask. Ahead of the open, S&P is implied up 0.12%, NASDAQ implied up 0.14%, Dow down 0.25%, small caps down 0.24%, VIX down 1.73% ahead of the open. And we'll take a look at some of these overnight charts in just a moment as well. Now, someone asked in the chat room, what is the best prop trading firm? I'm going to be the first to admit I have no idea. I've never done prop trading. I trade my own money. I always have, and I always will. It's just how I roll. I understand the purpose of prop firms. I, have my own opinions, but for folks that are able to make them work for them, that's awesome. I know some really good traders that pull out money from them regularly. But just be careful with that stuff. Sometimes the deck is stacked against you, in the way that the data outages may coincidentally happen at times that are convenient for the firm, and then they'll blame the provider and otherwise. So I would just say be cautious with that stuff. But if you really can do well at it, that's awesome. So let's zoom out. We know that the S&P pretty much consolidated from the European session. NASDAQ's starting to see a decent bid here pre-market. It was actually pretty flat earlier. Now those futures up 0.13%. And as I zoom out, I'm going to zoom back in before I go to the next chart. Take a look at 10-year note futures here. We have seen yields really rising quite a bit over the last, over the last month or so here after they had bottomed out. Part of that having to do with the economy starting to firm up a bit more, showing some signs that, the labor market isn't falling apart and so on and so forth. So but nevertheless, seeing a little bit of a bid in those 10-year note futures this morning. And that is something that's worth noting. That typically is constructive for equities to see rates coming down a bit. And gold. Let's take a look at gold overnight. Pretty choppy session here. And pretty decent chunky price range too. So definitely going to be one to watch. I'm of the opinion that gold is still in a constructive uptrend. We've seen no signs of really exhaustive, crazy buying. It's just been a sort of steady stair-step pattern higher in gold. So for me, I'm still looking for gold to hit $3,000 an ounce in the first half of 2025. That's my base case. I think we could consolidate a bit here. We don't have as many near-term catalysts, but gold is essentially a hedge against uncertainty. And that uncertainty has been building over the last year, and that's one reason gold has been reaching record highs. Take a look at Bitcoin. Bitcoin has had a heck of a bid off of its lows. It broke below 60,000, then recently put in a bottom. I remarked on Twitter where I thought that bottom was starting to form just around 63,000 change. And we could see we continue to move higher here. Now, obviously, we do have some levels above we have to take out on a longer term basis to show that this is a breakout and not just a reversal off the lows. And that would be around 67,000, 68,000. We need to see a push above those levels really on a weekly basis to get a sense that this is ready to run back to its highs. But overall, looking pretty constructive in an environment where central banks around the world are cutting aggressively. That tends to be favorable to things like Bitcoin, which are long duration speculative assets. Crude oil. Wow. What an absolute circus this has been to trade. And it's really been all about geopolitical volatility. So I've been looking at this one, and it looked like it was firming up. It looked like we were getting ready to make a bigger move, potentially to the higher 70s area. We got to the mid 70s. I think we got to about 76 and change, but then we rolled over pretty meaningfully when it looks like there's some degree of de-escalation in the Middle East. Israel saying they're not going to attack Iran's nuclear sites and their energy sites, even their oil production sites, and that seems to have cooled down some of the pricing for oil. We also have a mixed picture from China, the stimulus coming in much lower than what many expected, even with their latest talk. And that's also reduced the potential demand for energy. And then finally, we're not seeing as much storm activity in the Gulf. So we're seeing oil production resume there. And without future storms coming through, it looks like a lot of that production will continue uninterrupted. So oil looking like a pretty choppy trading day setup here. It even broke below $70 a barrel earlier. And S&P just continuing to consolidate sideways here. We do get some data today. We got New York Fed manufacturing earlier, came in well under expectations. The forecast was for 3.6. Prior reading 11.5, the actual reading was negative 11.9. So that's just showing you that in New York State, manufacturing is slowing pretty considerably, much more than expected. We also have two Fed speakers coming up at 11:30 and 1:05. We've got Fed's Daily and Fed's Kugler, whatever their pronunciation may be. Those could somewhat move markets. You've got this never-ending litany of Fed speakers trying to justify their policy decision, that extraordinary jumbo 50 bips cut into a rather resilient economy. And now you hear them backtracking a bit, even talking about pausing, which would be very interesting to go from full speed ahead, 50 bips we're going to cut, we're ready, mission accomplished, inflation's be defeated, to, oh dear, we should pause for a while and reassess this whole thing. Certainly not inspiring confidence in their ability to look in their economic crystal ball and forecast. We also got Redbook, which is retail sales year over year, rose 5.6%. But remember, this is nominal. So these are nominal sales. It's not adjusted for inflation. If you were to adjust it for inflation, it would come in probably closer to about 2%. Been asked what the impact of the election will be on the market by Atlas on Twitter. I think that's a good question. It's a big one. I'll try to answer it in a more summary form because I could probably talk about it for quite a while, and I don't want to necessarily go off on a tangent. I will just say that the biggest thing is whether either candidate gets a legislative majority so that they can effectuate policy outcomes. Because we know that one of the biggest additives of liquidity to the market has been fiscal policy. And so if we have either candidate, have their party win a legislative majority, then I think that will be more constructive for markets in the sense that they'll be able to continue this sort of pro-spending agenda. Because really, let's be real, both candidates are in favor of spending more money than we have on many things, including things we may not necessarily need, but that tends to be liquidity positive. It can also help to rekindle inflation. So it's something to be concerned about, that if that fiscal spend actually encourages growth and demand starts to become more than what we see from what's available in supply, inflation can start to come back. In fact, in some areas, there are signs that inflation is either sticky or beginning to reaccelerate a bit. So it's just something to be concerned about. It doesn't mean, we're imminently headed for a bear market or any of that. It just means that there are some of those risks on the periphery that we need to be cognizant of. And so if a candidate wins and their party doesn't take the majority, then I think it's going to be more gridlock in DC. And there may not even be any kind of formal spending agenda. Let's recall that for fiscal year 2025, which is the year we're now in, October 1st marks the first day of fiscal year 2025 for the U.S. government. I know that's weird, because it's not 2025, but in their accounting book it is. They still don't have a budget. We didn't have a budget last year. We didn't have a budget the year before. We have no budget. We have no idea what we're really supposed to spend other than this continuing resolution. So that's the other issue, is there's no formal fiscal policy agenda. So it'll be interesting to see, what happens with the election. The other concern is, of course, if it's a very close election, the losing candidate may contest it, and this could drag on for months. If you recall what happened in 2000, that election wasn't settled till January. It was adjudicated by the Supreme Court. It wasn't really settled by the voters. So there is some possibility it could drag on, create more uncertainty. That uncertainty could create more volatility in markets. So those are the scenarios I kind of see playing out. I think it really depends on how the election goes, if a candidate gets a majority in the legislature, or if we have more uncertainty about the election outcome as to what unfolds from there. And we're just about 3 minutes away from the market open here, folks. Thanks for joining me. It's going to be a lot of fun. I'll be on till 10 a.m. Eastern, and I'm back every Tuesday at 9 a.m. Eastern. And if you want to check out Bookmap, if you don't have a copy for yourself and you want to get a pretty chunky discount, check out traderaid.com/bookmap. That's traderaid.com/bookmap. You get up to 40% off. Just scroll down to the specials. Some pretty awesome deals there. It does not come with data. You do need to get data from DXFeed, Rhythmic, or Bookmap themselves. But personally, I favor Rhythmic because I can have the stops and icebergs displayed on screen, which for futures is extraordinarily helpful. For me, it's a game changer, quite frankly. And right now, folks, we also have a 3-day free trial on the TraderAid Discord where you can check out all my cutting-edge tools, including some of the add-ons I've made for Bookmap. Just visit whop.com/TraderAid. That's WHOP.com/TraderAid to learn more. In just about over a minute from the market open, ahead of the open, S&P implied up 0.11%. NASDAQ implied up the same. Russell cash implied down about 0.2%. Dow implied down about 0.25%. VIX down about 1.73% as we prepare for the market open. And we have yields dropping across the yield curve, largely led by the 10-year. Gold pretty much flat, silver up about 0.33%, copper down 1.25%, platinum down 1.37%, and Brent and crude down pretty significantly, down about 4.5% from that headline last night that I posted. Somehow went viral. I don't know how some things go incredibly viral and other things go completely nowhere, but that headline about oil involving Netanyahu saying we're not going to bomb Iran's oil facilities, that went crazy viral. Hey, thank you. You have a nice one too. RK says bracketing has rendered Bookmap mostly useless unless removed. I would kind of disagree with that personally. First of all, I'm not using Bookmap just to watch liquidity. You know, I really find value in the icebergs and the stops. But the other thing is when you see other orders pop up on the screen, you know, they're still visible outside of the brackets. I actually have labels automatically populate for large enough orders, like those that are above 500. So you can use the liquidity marker, and you can set it so that you have orders that are basically 500 and up, so more than 499. You can show up to 5 levels. Those labels will automatically populate if bids or asks come online of that size. So, you know, I get it. And there are actually tools you can use to get rid of the bracket. If you want, you can use TradeMap to get rid of it. The only issue I have with TradeMap is then I don't have my, I don't have all the data I may need for my add-ons. Right? So I don't personally use TradeMap, but I know other people that do use TradeMap and are able to get rid of those brackets just fine. And so markets open here. I'm going to just pull up a couple of bits of information here. I do like to watch some of the options flows as we get into the trading day as well. Gives me a sense of directionality. I like to look at the index options, ETF, and single stock options. I think the combination of all of that gives me a pretty good sense as to what flow is driving the market, the underlying issues. And a quick rule of thumb is if calls are outnumbering puts in the indices, single stocks, and ETFs, it's generally going to be a day that is constructive for the market. And that's not every day, but it's many days. And that's sort of the early indication you can get, is watching the flow. It's really what it's all about, is finding those convergent signals. So I also like to watch that 20-minute opening range. You can see I have the highest and lowest price levels already marked on screen. So we can see if we're breaking above or below those levels after like 9:50 a.m. Eastern. Let's take a look at some of the majors. Apple on screen just dropping and then popping a little bit here below, now testing its point of control and VWAP level. You can see a lot of offers stacking above Apple. That tends to be constructive. It's a bit magnetic, particularly if price is heading in that direction. So for me, I would be looking at Apple constructively because you just don't see that same liquidity below, but boy, do you see a ton of it above. So there's a lot of interest in higher prices in AAPL. Amazon, a bit of a drop, now consolidating here. And you can see there's a much bigger distribution of offers and bids on Amazon. Doesn't look the same as Apple, right? You still got a decent amount below too, so less certain what folks are really looking for on this one. We've got Alibaba on screen. I've just been watching some of these Chinese stocks out of morbid fascination. They've given up some of their gains, but they're still well off their lows, and the Chinese government's trying to calibrate their response, trying to figure out exactly what it is that they're going to do to respond to an economy that never really is showing some signs of slowing further. Exports are slowing. Imports really haven't done so well as well. If you really look at the Chinese consumer with most of their wealth, their savings tied up in real estate and the real estate market imperiled, they don't want to spend. So imports are lagging, exports are lagging. China's not looking so great. So the government's trying to calibrate their stimulus response, and so far it's been pretty piecemeal and somewhat disappointing. Nevertheless, that's one reason I think we see these shares pretty volatile in BABA today. Google shares, or Alphabet, whatever we prefer to call them, I have no strong preference either way, just getting a bit of a pop after an initial drop at the open. And this is sort of like Amazon more than Apple. We see a pretty even distribution of interest in prices higher and lower based on these offers and bids. FXI, the China large cap ETF, just dropping a little bit off the open here. And it was down yesterday about 2%. It's down more today. It's down another 3%. Investors still not really thrilled with the Chinese government's response. It does seem lackluster. They're trying to address a $62 trillion problem with hundreds of billions of dollars of stimulus. So to say insufficient would be, well, it'd be pretty accurate to say insufficient. JD, another Chinese stock that I've been watching, also a bit of a pop and a drop, and you can see with the interest levels, it's pretty well distributed. So we'll be watching the flows in these as we go throughout the day, but it does seem like these stocks, these Chinese stocks, will be under a bit of a pressure as we go throughout the day. Meta dropping a bit, consolidating lower, trading 586.56. You do see a fair amount of liquidity above, in fact, an excess of offers just above price versus where we see the bids below. But if we look at the entire order book, there's actually much more bidding going on if you zoom out more. It's an excess of about 307,000 shares on bid versus the offers if we look at these indicators that show us that in real time, which is pretty darn handy, quite frankly. And Microsoft getting a bit of a drop off the open, kind of coming back, testing VWAP and being rejected here. You could see there's a fair amount of supply and demand levels on screen. If you zoom out a bit, there's actually more offers than bids on Microsoft by a delta of about 256,000. Now, NVIDIA, everyone's favorite stock to love, to hate, to make conspiracy theories about, you name it. Pretty much chopping sideways here. We saw some flow last week I identified that was targeting a whole series of options upside all the way up to 135. Obviously, we exceeded that, but you could see that interest does play a role in price discovery. And this morning, NVIDIA 142 calls seeing some attention, about $250,000 of premium paid for those expiring November 15th. Microsoft also seeing some call flow for the 430 strike, about 400,000 premium paid for those expiring December 20th. Oracle, 185 calls, 352,000 paid for those expiring December 20th. And Tesla, the wild card, their presentation was, well, it left a lot to be desired. A lack of specificity with the backdrop of remote-controlled robots that wasn't really ever made clear whether they were remote-controlled or not by Elon, but it's been made clear by the robots themselves. If you look at some of the interactions with them, and Bloomberg ran a story about it saying that this was pretty much all remote-controlled stuff. So some investors justifiably a little bit disappointed that this is yet another sort of smoke and mirrors. We don't know when the robotaxi is going to come, maybe sometime in 2027. Obviously, we've been promised these things for about a decade. So this one's probably going to be volatile for a little while here. But I do like where it is on a trend line basis. If you look at a Tesla chart and you zoom out, you can see it kind of pinged this bottom trend line where it's gotten bids in the past. So maybe we're going to resume from there. It's at least a decent risk reward setup. Going to go back to S&P futures here. Not a whole lot to see off the market open. Pretty narrow trading range. Really just about 4 handles here. And some news coming from Apple. They're introducing a new iPad mini starting at $499 with 128 gig storage. Not really having much of an effect on shares so far. I find, yeah, someone in the chat says, I use Bookmap. I've been trading gold, NASDAQ, and oil only for 2.5 years. I swear that Bookmap is a powerful management tool. Yeah, I agree. I think for intraday trading, it's one of the most powerful tools that exists. And quite frankly, with the ability to add new data to it, there's a whole myriad of different plugins for it. You can also add external data to it, as I have with my options visualizer plugin. It's a great platform to build on. And so for my intraday trading, I always start with Bookmap, looking at what's going on with the instrument and any other intermarket related instruments that I might be trading against. And then I zoom out and I'll use things like Motive Wave and TradingView for the bigger, longer term charts. And I find combining all of that really helps to give me an edge. Like looking at the whole year-to-date volume profile in the S&P and where some of those pivot levels may be, and then zooming in on the intraday time frame and seeing how we interact with those levels is one really powerful way to look at it. Same with knowing where options positioning is in some of these instruments like the S&P. I've built a number of tools that allow us to visualize those levels, whether it's gamma, whether it's the volume flowing through. Having that in front of me as well as Bookmap, and then eventually as I built it into the options visualizer, has been a game changer. So I do find the software to be very helpful. I know it takes some getting used to. It's certainly different than reading a normal chart, but once you do get used to it, once you acclimate to the way that Bookmap demonstrates data, and you can fine tune it too. Like there's all kinds of things that you can add in or remove. It can be as complex or as simple as you want. I find it invaluable. And again, folks, if you're interested in picking up a copy, you don't have to pay full price for the first term of your license. Visit TraderAid.com/bookmap. That's TraderAid.com/bookmap. Scroll down to the specials. You can get up to 40% off, which is pretty decent. You can see S&P futures balancing around VWAP here. That's the white line on screen. See about 500,000 of call flow into Tesla 225s expiring this Friday. That's another thing you'll note about Bookmap that's pretty cool is that the folks that are behind the software, the team that helps to develop it and support it, is readily available both on the Discord, and you can see them interacting on the Bookmap YouTube channel with folks that are watching this stream. That's really awesome. And that's not something you often see in some of these other places or more hands-off. So it really is a community, which is something that I really like about it. Apple, we've got 240 strike calls coming through, 590,000 premium with an expiration of November 15th. Let's take a look at Apple. We can see just a little bit of an upward drift there as that call flow is coming through. We can also see 240 is the largest area of offered liquidity, 306,554 shares on offer there. And that's no coincidence that you see options interest and that resting offer up there at the same time. So that does give us a little bit of a sense as to maybe why there's so much liquidity above and not quite as much below on Apple. Indeed, all those resting offers just overhead led by that 240 offer. And just to recap, 590,000 premium paid for that 240 strike expiring November 15th. So that would put it after Apple releases earnings. So you could kind of look at this as an upside bet on Apple earnings, that options flow we're seeing. Let's take a look at the NASDAQ here. Seeing a little bit of seller exhaustion in the NASDAQ on that last move. This is an indicator that I built and customized. It's available on the TraderAid Discord. And sometimes these exhaustion prints can be turning points. So it'll be interesting to see what happens from here. But that's a really aggressive seller exhaustion on that print. And we are seeing a bit of a bid off that seller exhaustion print in the NASDAQ. So let's watch the flow in the NASDAQ, see if we get a reversal off that exhaustion print. Certainly seeing some attempt to at least balance above the point of control, but buyers are not showing much conviction of yet. And you can see that with the really small bubbles. Sellers aren't showing much conviction here yet either. We do see that point of control starting to get pulled higher a bit, which is often bullish to see. Got some more call flow coming through. Take Two Interactive, 165 strike calls, 415,000 in premium paid for those. Also some puts coming through for Taiwan Semi, 182.50 strike for this Friday, 335,000 in premium paid. NASDAQ not necessarily really putting in a convincing reversal here, but also not taking out that low we saw from the seller exhaustion print of yet. So just balancing here. Let's take a look at the S&P. S&P just sort of going sideways. Not a whole lot to see here. Pretty boring opening range too, I've got to say. Just about 5 handles on that opening range. Looks like we're starting to see a bit more selling pressure come into it. And it is another day where liquidity is constrained. Just 40,000 order book depth. So this is a situation when you have order book depth this low that it makes sense to trade with wider stops if you're going to trade at all, and that means smaller position size. It means being more careful about what trades we might take on. Seeing some more put flow coming through, this time NVIDIA 135 strike. Underlying's at 136.48. That's 323,000 premium paid, and that's for options expiring this Friday. Some more flow coming into Taiwan Semi as well. Another sweep for the 182.50 puts, 326,000 in premium paid there. Calls are still outpacing puts on the unusual flows we've seen so far. Let's zoom out here. We can see that we're also getting some of the call and put data from SPX, from the CBOE. And so far on the S&P 500 options, calls are outpacing puts about 2-to-1. It's pretty early yet, though. We'll see how this evolves. Got some big flows coming into XLE. XLE, or the energy producer ETF, is pretty hated. Positioning in this has been exhaustive to the downside. Really, no one wants exposure to energy, and I can't blame them with oil not really performing, but this was a pretty big sweep. This was $1 million in premium paid for the 97 strike. It's currently trading 89.84, expiring November 15th. So watch XLE. That's an interesting bit of options activity in it so far. Let's take a look at crude oil. Speaking of XLE. And crude oil just stair-stepping down here. Now looking like it's going to once again take out $70 a barrel. And we can see that really overnight, the path of least resistance has been lower. We've got a little bit of a pop back this morning, only to be sold into once again. Markets are pretty much flat right now. S&P up just about 0.09%. NASDAQ up 0.05%. Russell 2000 up 0.14%. And Dow down 0.5%. Vol down 2.48% on the VIX. Spot VIX trading 19.7. So overall, looking kind of like a balanced day so far. We haven't broken above or below the opening range, and the opening range is about the most uninspiring opening range I've seen in a while. It's like a 5.5 handle opening range. Not much to see here. Seeing some sweeps coming through ARM and ASML. ASML 870 call strikes, 307,000 premium paid for those. ARM 175 call strikes for the 20th of December, 633,000 in premium paid for those. Those ASML expiring 25th of October. Also some MicroStrategy calls coming through for the 220s. The underlying's trading 204.20, and that was 685,000 in premium paid for those expiring November 15th. Let's take a look at the NASDAQ here. NASDAQ taking out those lows. So really buyers had a chance with that seller exhaustion print. You could see sellers really struggled to get much direction for a while, but now they're taking out the point of control and retesting VWAP on that move lower. I've just got about 8 minutes left on the stream, folks. I hope this has been helpful to your trading day. If you want to learn more about what I do at TraderAid, visit traderaid.com. We do have a 3-day free trial on our Discord. We also have a number of unique trading tools only available on our Discord. Of course, if you'd like to check out Bookmap, and I suggest that you should check it out if you're a short-term trader looking to really try to build an edge, monitoring the way liquidity moves markets, visit traderaid.com/bookmap for up to 40% off. If you'd like to pick up a copy of the SPX Options Visualizer, it's available at traderaid.com/SPX. And you do need Bookmap to use it. Let's move back to the S&P, see how some of the options flows are shaping up here. And I'm just going to pull this from my Discord here as well, because sometimes it can get, there's a lot of things going on. Sometimes they can get a little bit stuck under the label. So the hot call right now implies 59.3325 on S&P. The warm call implies 59.3825. The hot put 58.9825. And the warm put 58.7825, with calls leading puts 2-1. So that's overall pretty constructive for this market as we start the trading day here. Let's take a look at NVIDIA here. Seeing some selling pressure increase in NVIDIA since we talked about that put sweep coming through at 9:46 a.m. We talked about the 135 puts, 323,000 in premium paid. And boy, we can see that that is having an effect. In fact, as that sweep came through, you can see it right here on screen. This is why watching options flow and then watching the liquidity in the underlying can be so constructive. This would have been a scalp setup just off the options flow. And we can see that interest building at the 135 bid, which is where this options is, this put is targeting for this Friday, that 135 level. And Bitcoin surging, now trading 67,200. And this is just 20 minutes on screen. This is a pretty big move happening in Bitcoin, up about $1,300 in the last 20 minutes. So big moves in the crypto miners as well. They're certainly getting some good price action. And other crypto adjacent stocks. MicroStrategy up over 2% here, for example. Coin up 3.22%. Mara up 4.21%. Lots of squeezes there. And I find it helpful that I'm able to look at pretty much whatever I want in Bookmap too, whether it's futures, stocks, ETFs. You know, it's a good place to be able to screen these things and get a sense of the overall picture. And we can see interest building above in this Bitcoin futures contract here as well, all the way up to 68,000 here. Let's take a look at the NASDAQ. NASDAQ getting a bit of a pop off that low, climbing towards the high of the day and then giving some of that gain back. S&P 500, not quite as robust as NASDAQ. It looks like it's really the NASDAQ stocks playing a dominant role so far. Apple leading the way. On the healthcare side of things, boy, you got a big drop in United Health. I believe that has to do with earnings. It's down 9.12%. In fact, the whole healthcare group is just hating it today. Many of these stocks down over 4%. So it looks like the broader exposure is dragging down the S&P a little bit, while the strength in tech is helping the NASDAQ. Energy also getting clobbered today. Exxon down about 3%. Conoco down 3.33%. So a mixed picture, but that rotation back into tech and primarily Apple and to some degree Tesla helping the NASDAQ, which comparatively looks a bit better than the S&P. It's trading a bit better as well. S&P up just 0.05%, NASDAQ up 0.14%. Now, folks, this is options expiration week, so it is important to keep that in mind, because that does mean that technical analysis, order flow analysis, volume profile, other things like that can be less efficacious, because you have a number of large trading desks that are having to roll positions, and they're not looking at charts, and they're not looking at order flow, and they're not looking at volume profile. They're just looking at positions they have to roll. So there's an imperative, there's a mandate, and that is going to affect how the market trades for the rest of this week, meaning that some of the probabilistic outcomes we may model for with our systematic approach, if we're using one, may not have the same hit rate. Seeing another seller exhaustion print here in NASDAQ on that downdraft. Let's take a look at some of the NASDAQ stocks as we wrap up the stream. Apple moving sideways to higher here, taking out its day highs recently, and some of that overhead liquidity we talked about earlier. Remember, we discussed that that overhead liquidity that we had would largely be magnetic, likely pull shares higher. We also saw some pretty constructive flows in Apple calls, the 240s at 9:42 a.m., 590,000 premium paid for those expiring November 15th. That helped to pull Apple shares higher as well. So you can see that liquidity, if there's an imbalance, if there's more liquidity overhead and the flows are bullish, that can be a pretty good sign that there's room to the upside. Indeed, that was the case here today. Amazon, not quite as inspiring in price action, but still making new cash session highs and well above VWAP and point of control. So looking pretty constructive. You can see that there are offers building, especially that large supply zone of 190. In fact, it's kind of funny. The 190 price has 190,000 shares on offer. Coincidence? Probably, but still funny. BABA, just a hot mess. Pretty volatile. Path of least resistance seems to be lower, but now consolidating. And Apple recently making new cash session highs, but getting rejected at that level of offered liquidity around 167, where there's about 24,000 shares on offer. FXI consolidating here, but largely down on the day, as is JD.com. And Meta seeing a reasonably even distribution of offers and bids. The bids quite a bit lower than current price, and Meta actually making new lows recently. The stock was an important part of the leadership in NASDAQ, but today it is lagging. Microsoft also lagging a bit, testing those day lows and bouncing, but remaining below the point of control and VWAP. pretty decent amount of supply overhead at 422 with 7,000. Well, now, nope, 7,351 shares on offer there. And NVIDIA stair-stepping lower. Remember, just like with Apple, we saw that large call sweep. With NVIDIA, we saw a large put sweep targeting 135 coming across the wire at 9:46 a.m. 323,000 premium paid for that expiring this Friday, and that certainly had an impact dragging shares lower. So you can probably see now how using options order flow and the ability to visualize liquidity in real time on Bookmap, it's a match made in heaven. It really helps to augment one's ability to find an edge in these markets because you can see the options impact. You can trade off the options impact in near time. And Tesla, getting pretty darn close to where we saw those calls targeting that 225 strike. We got all the way up to 224 and then started giving some back here and retesting VWAP. Earlier, I talked about how we just started to get close to this trend line. We tested it yesterday. Today, we seem to be bouncing off of it. A decent risk-reward area to look at swings. One wanted to take a long swing in Tesla. Using that trend line as the basis to manage risk is not a terrible idea. So, folks, that's going to wrap it for me. To learn more about TraderAid, visit TraderAid.com. We do have a 3-day free trial on the Discord. You can get up to 40% off of Bookmap by visiting TraderAid.com/bookmap. Scroll down to the specials. If you want the SPX Options Visualizer add-on for Bookmap, visit TraderAid.com/SPX. Thank you so much, everyone, for tuning in. I'll be back next week, Tuesday at 9 a.m. Eastern. Wishing you a great trading week ahead and an awesome Taco Tuesday. See you next time.